In the event that management wants to include interim profits in its own funds calculations, despite audited losses, then its interim results should be audited by an independent, licensed audit and assurance firm and be approved by CYAUSE before they are used. Given the tight deadlines of COREP reporting, the above approach is not practical and is rarely used. The reference is from CYAUSE Circulars C305 and European Banking Authority. Other reserves calculations. Other reserves, as per the statement of, should be reserves available to the CIF. If such reserves are refundable or payable back to the persons who contributed them, they should be deducted from the calculations of own funds. Commonly, other reserves may include non-refundable contributions from shareholders or other connected parties. Non-refundable, as the word suggests, means that these contributions have been given to the CIF and they belong to the CIF without any constraint. These reserves should not be deducted from the calculations of own funds. This reference is from Article 26(1) of the CRR. Investors' Compensation Fund, ICF, contribution should always be excluded from the own funds calculation. Common Equity Tier 1 Capital. Reference is Circular C162. The new deduction from the own funds calculation of 3%, serving as an additional cash buffer of the Investors' Compensation Fund, as small as it may be, should be deducted from the own funds calculation and should agree with the funds deposited in a separate bank account. This cash buffer should be used in case there is need for an extraordinary contribution and should not be used for any other purpose. In other words, the CIF should be able to show this buffer in its bank account at all times. Reference is Circular 334.